Greetings, fellow traders. Thank you for being here. Today's video is going to be kind of high pace. This is designed for experienced traders, but if you are a newbie, I work with newbies all the time, and my program is actually designed for newbies, even if you are brand spanking new to Forex. So if you've been a little rusty, if you've been on a long break and you're trying to get back into the groove of things, this video should be perfect for you and will help you get back into the groove of things. So without further ado, for this video, we are going to be talking about different types of conditions, perfect strategies for each condition, and how to choose a signal provider, and then a brief summary. So make sure you watch this video all the way through because I'm kind of going to speed through the types of conditions, and then towards the end of the video is when I'm going to go over the strategies for each of those conditions. Okay. So the first type of condition, this is something that all of us should be aware of, and that is trending conditions. So in trending conditions, it's pretty obvious. We see higher lows, we see higher highs, and it's just an easy situation for us to trade. And in the downtrend, we see lower highs and lower lows with strong bearish momentum. The second type of condition is going to be ranging. So the key difference between ranging and consolidation is that there's no clear trend in either one of them. However, in ranging conditions, you can often see short-term trends. So even if you're just looking at this, even though the trend is not clear, you can kind of see some very short uptrends and some very short downtrends. But this is not enough information for you to establish a clear trend. So the third type of condition is consolidation. This is very common, especially with like Euro US dollar, the pound US dollar. You see lots of consolidation. But with the US dollar, starting to pick up some ground, we might see some very strong trending periods at the current moment. And then we have divergence. Now, divergence isn't something that you see all the time, but in unstable market conditions, you'll see divergence a lot. And the biggest thing to understand with divergence is the momentum is always going in the opposite direction of the trend. So in this case, we see a low and then we see a lower low, which means in theory, there should be a downtrend. But then if you look at the momentum, this is the stochastic indicator. You can see that the stochastic is making low and then a higher low. So the momentum is going up when the trend looks like it's going down. And then it's pretty obvious to see what happened with that green arrow. The price actually went up. All right. So now let's get into the strategies for each of those conditions. So when it comes to trading conditions, I have two of my favorite strategies, and that is trend lines and trend channels, and the break of structure and change of character strategy. So anytime I can find a nice trend, that's a beautiful situation to be in, especially during these times, because it's been kind of tricky lately in terms of the market, with gold making extremely um, big moves. It's just the market's been very unpredictable. So it's been kind of hard to find those solid trending conditions. So here's basically an example. And this is also a screenshot from my manual as well. So when you become a member of my program, I have a complete book on how to trade Forex that you will also receive. And I have lots of my material is kind of like in this format as well. So it's very easy to follow along. But as you can see, uh, anytime you are fortunate enough to trade a trend, this is going to be your easy money. And when it comes to trading trends, you're looking more on the longer time frames, like the 1 hour, 4 hour, and the daily time frame. So it's going to be kind of tricky to use trend channels and trend lines on the minute time frames, just because you don't really have a lot of data to work with, and that just makes things a little bit unstable compared to if you work the longer time frames. Usually, you're looking at a lot of data and you will have some pretty good information to go off of. All right. Now, this is the breakup structure versus the change of character. So, the biggest thing to remember with breakup structure is that in a downtrend, you want to see lower lows and you want to see lower highs. So if you're currently in a downtrend and you start to see higher lows or higher highs, then that right there signals the change of character. So once you have a change of character, what you want to do is you want to wait for that pullback. After the pullback happens, go ahead and place your entry and then use the higher low or lower high after the pullback as your stop loss, and you should be good from there. Now, when it comes to breakup structure and change of character, you can use it on the 15-minute time frame, but just be aware, longer time frames gives you better overall data to trade off of. Whereas short term or shorter time periods, they're great because they're giving you more information as to what is happening right now. But often you miss the bigger picture with those shorter time frames. But I find that when you use the 15-minute time frame with breakup structure and change of character, you can usually spot those reversals much better before there's an actual trend that you will see on the longer time frames. All right. Ranging conditions. So for me, I have a trading robot that I use for ranging conditions, only because in ranging conditions you can typically trade in both directions because since it's ranging, most likely the price is going to hit your sell the entry from where you sell and the entry from where you buy. So it's pretty safe to trade in either case. Most robots are designed for ranging conditions anyway. So and you don't have to sit there and monitor everything as well. However, the breakup structure and change of character works pretty well. And also, there's so many different price action strategies out there. For me, I like using Bollinger Bands for price action because it's one of the easiest strategies to learn and use, especially if you're new to Forex. And you can see right here. So this right here is a Bollinger Band. So the upper band represents the overbought area. The lower band represents the oversold area. So when you have spikes from either one, then that's a sign that a reversal is coming. Now, if we look at this example right here, the candle underneath the black arrow, if you're just trading off of the candles, you can see here, if you understand how to read supply and demand with candles, that there is a big supply zone on the wick above the above that candle. So even if you weren't using any indicators and you were just trading this based off of the candle, you can see with that one candle that the price is overbought. But if you're very new to trading and you're not used to looking at candles, if you go based off of the upper band, you see that there is a clear spike showing that the price is overbought. And then you can see a couple candles later that the downtrend started to happen. So Bollinger Bands is super easy and most cases reliable as well, especially if you're using an oscillator, which is what you use for momentum indicators to give you some more confirmation. It's very hard to go wrong with Bollinger Bands. All right. So I prefer to trade consolidating conditions when high impact news events are scheduled in hopes the consolidation will be broken. So uh, the euro US dollar, for example, that's a very common currency pair that normally is in consolidation until there's either high impact news events scheduled for the euro or high impact news events scheduled for the US dollar. So there can be a lot of times where you're just waiting for that breakout to happen and the price just goes up and down in a very tight range. For that reason, I like using breakout boxes to trade consolidation and placing my trades right before the news is about to happen. I use buy stops and sell stops. I stay away from limit orders because most of the time they won't get triggered. So right here is an example of consolidation. So you can see here, I have a buy stop at the resistance area. I have a sell stop at the support zone, and I would place those trades roughly 5 to 15 minutes before the release and in hopes that once that news comes out, the momentum is going to be so strong that when my buy stop or my sell stop is triggered, uh, the move is going to be like 50 pips, or if it's like gold, it might even be 100 over 100 pips, and then boom, I can go ahead, take my profit, and then I am done for the day. So this is a great strategy for people who don't have much time or don't want to spend a lot of time on the market trading because the more time you're trading, the more risk you're going to have. So ideally, you want to get in and out, hit your target for the day, and be done trading. All right. So divergence. This has been very important to understand because the market has been very unstable. I definitely recommend you guys brush up on your divergence. With the way things are shaping for 2024, we can already see that 2024 is going to be a wild year. So when things are wild and unstable, that creates charts that look kind of messy. And when charts look messy, then you can expect some divergence to happen. All right, so we kind of touched on this earlier, so I'm not going to spend too much time on it. But just, you can see here the trend or the candles were making lower lows, which was just basically a false read on the charts. But then having that second confirmation, you can see that, oh, wow, the momentum is actually going up. TradingView also updated the stochastic indicator. So now they call it the stochastic momentum index indicator, and it's supposed to be even more accurate than stochastic. So I definitely recommend you guys check that out. All right. So this one is a big one. A lot of people love using signal providers because of the stress and anxiety when it comes to finding their own trades. So many providers will just send out like 20 different signals a day and see what sticks. Stay away from those type of providers because the only way you're going to be consistent with them is if you take all of their trades, and that's just too much to do. Um, Focus on those providers where you see, wow, they only really focus on maybe 1 to 3 currency pairs. Those are the guys who are going to be experts at those currency pairs. And even if they only have 5 to 10 signals per week, that's pretty good because that means your accuracy is going to be very good. And in the long run, you're going to make money with those guys in comparison to those providers who's giving you like 20 signals per day. Also, keep in mind, you want to manage and balance your risk. So you shouldn't be doing only one thing. So you have a percentage of your trades that come from signal providers. You might have a percentage of your trades that come from robots. And then, of course, you have a percentage of trades that you are personally doing yourself. So if you balance things that way, then you're not dependent on just one way of making money trading, and you're also not dependent on just one provider. So if you can find, let's say, three providers, maybe one specializes in gold, the other one specializes in the US 30, and the other one specializes in the Euro US dollar, for example. If those guys only give like 5 trades per week, well, you got 15 trades per week just from those providers, which is a pretty good chunk of trades. And if they're experts at what they're doing, you're going to do very well. Also, make sure that the signal providers you're using match your schedule. This is a big one because if you choose a provider who's awesome, I mean, they're giving the best trades and everything, but maybe they're giving those signals at 2 o'clock in the morning and you're asleep. Well, unfortunately, that provider is not going to work for you. And if you change your schedule too much, that's going to throw you off in terms of, maybe you have a second job, maybe you have family and other things going on. So if you're staying up all night, then you're going to be sleeping all day, or you're going to be tired all day and if you force yourself to stay up. So, try and have as much balance in your life as possible because at the end of the day, what we're looking for is a game plan that's going to be sustainable long term. So, if you're saying to yourself, okay, you know what, this week I'm going to stay up all night, all morning and trade and follow these providers, that might be great for that week, but then is it realistic for you to do that every single week, every single day, every single month? Most likely it's not going to. So keep those things in mind as well. Another thing with signal providers, this happens a lot. Some people will only count their winning trades. So they're sharing and showing, oh, you know what, I just made 1,000 pips this week, but they lost 2,000 pips that week. They're not saying everything. And then you have some providers who will change the trade. So, like, they might give a signal on buying Euro US dollar, for example. And then they realize, oh, wait, it was a bad signal. And then they send out a update telling you to sell the Euro US dollar instead. So even though the buy was a loss or a losing trade, they don't count it because they gave an update telling you to sell instead. So you have some providers who are really shady in this business. Unfortunately, it is what it is, and we kind of just have to deal with it. But this is why I think signal providers should be a very small part of your overall trading business as a whole anyway. All right. So in a nutshell, that's the refresher that I have for you guys today. Um, I kind of brushed through a lot of content. So if you are serious about Forex and you really want to go into great detail, I work with people one-on-one, and I also update my team each week. Sometimes I give signals as well, and sometimes I give trade ideas and market reviews. I usually do them every week on Sundays and Mondays. I would love to work with you. If you are serious about Forex, check out the website. And thank you for watching this video. And I wish you guys all a great new year and be blessed.